block pattern, which is the mirror image of the 3 stars in the south, so it's a bearish reversal pattern. This pattern is a bit counterintuitive in the same way as the last one because it's a bearish reversal pattern formed only by bullish candlesticks. The pattern is formed by 3 candlesticks with decreasing body size and prominent upper tails. The progressive decrease in body size means that buyers are losing momentum, and the longer upper tails means that sellers are gaining momentum in relation to the buyers. Notice that, similarly to the 3 stars in the south pattern, the third candle can be in a harami position, which is when the candle is fully contained in the range of the previous candle. This increases the strength of the advanced block pattern because the harami is also a reversal pattern. The advanced block appears when price is going up in order to signal a reversal to the downside. The last 2 complex reversal patterns formed by 3 candles are the fry path bottom and the dumpling top. The fry path bottom is a bullish reversal pattern formed by 2 small bearish candles, followed by a small bullish candle that opens with a considerable gap up. The gist of this pattern is that the third candle jumps in the opposite direction of the previous 2 candles in an unexpected way. The logical interpretation here is quite simple, since a sudden change in movement with a gap denotes that the selling pressure has vanished away and the buying pressure is now dominant. The fry path bottom appears when price is going down in order to signal a reversal to the upside. Next we have the dumpling top, which is the mirror image of the fry path bottom. So it's a bearish reversal pattern composed by 2 small bullish candles followed by a small bearish candle that opens with a considerable gap down. The logical interpretation follows the same simplicity of the fry path bottom. A sudden change in direction aligned with a gap down means that buying pressure is vanishing away and that selling pressure is now dominant. What catches the attention of the fry path bottom and the dumpling top is that the third candle seems to hit an unexpected barrier to change direction. The dumpling top appears when price is going up in order to signal a reversal to the downside. This pattern finishes off the set of complex reversal patterns formed by 3 candles. Next we'll look at the final 4 complex reversal patterns that are formed by 5 candles. Notice that we jumped from 3 candles to 5 candles because there are no relevant complex reversal patterns formed by 4 candles. The next pattern we are going to study is called the bullish breakaway, which is a bullish reversal pattern formed by 5 candles. 4 of them are bearish and 1 of them is bullish. The first candle in the pattern is a medium-sized to large bearish candle. The second candle opens up with a gap down and forms a small bearish candle. The next 2 candles are also small and bearish. The 5th candle in the pattern is what gives the pattern its name because it's a bullish candle that closes above the open value of the second candle in the pattern. That's important because it violates the gap created by the sellers along with the previous 3 candles. The logical interpretation here is that selling pressure is exhausted in the 3 middle candles of the pattern and buying pressure begins to appear in the 5th candle. The bullish breakaway appears when price is going down in order to signal a reversal to the upside. The next pattern is the bearish breakaway, which is the mirror image of the bullish breakaway, so it's a bearish reversal pattern formed by 4 bullish candles and 1 bearish candle. Following the opposite rationale of the bullish breakaway, in the bearish breakaway, buying pressure slowly exhausts itself in the middle 3 candles of the pattern after the gap up, and the selling pressure suddenly appears violating the gap up. The bearish breakaway appears when price is going up in order to signal a reversal to the downside. The next pattern we are going to analyze is called tower bottom, which is a bullish reversal pattern. The first 2 candles in the pattern are bearish. 1 medium-sized candle followed by a small candle. That already denotes a decrease in selling pressure, giving the decrease in the body size of the second bearish candle. The third candle in the pattern is a small bullish candle that opens with a gap up. That means a sudden burst of buying pressure. The fourth candle in the pattern is equal to the second candle in the pattern, and it opens with a small gap down. The important thing here is that a sudden burst of buying pressure appeared, and then the sellers tried to overcome that but failed to do so because the fourth candlestick in the pattern fails to advance price to the downside any more than the second candle did. The last candle hits the final nail in the coffin, so to speak, because it opens with a gap up and forms a medium-sized bullish candle. The pattern receives this name because the position of the third candle resembles the shape of a tower. Notice that there is a story that goes along with the pattern, which is that sellers were advancing price to the downside and then started to deaccelerate. After that, a sudden burst of buying pressure appeared, and sellers tried to overcome that. The fact that sellers failed to fully overcome the buying pressure opens the door for the buying pressure to rise and create the bullish reversal pattern. The tower bottom appears when price is going down in order to signal a reversal to the upside. The final complex reversal pattern we are going to see is the tower top, which is the mirror image of the tower bottom, so it's a bearish reversal pattern. The first two candles in the pattern are bullish, one medium-sized candle followed by a small candle. That already denotes a decrease in buying pressure given the decrease in the body size of the second bullish candle. The third candle in the pattern is a small bearish candle that opens with a gap down. That means a sudden burst of selling pressure. The fourth candle in the pattern is equal to the second candle in the pattern, and it opens with a small gap up. The important thing here is that a sudden burst of selling pressure appeared, and then the buyers tried to overcome that but failed to do so because the fourth candlestick in the pattern fails to advance price to the upside any more than the second candle did. The last candle hits the final nail in the coffin, so to speak, because it opens with a gap down and forms a medium-sized bearish candle. Observe that there is a story that goes along with the pattern, which is that buyers were advancing price to the upside and then started to deaccelerate. After that, a sudden burst of selling pressure appeared, and buyers tried to overcome that. The fact that buyers failed to fully overcome the selling pressure opens the door for the selling pressure to increase and create the bearish reversal pattern. The tower top appears when price is going up in order to signal a reversal to the downside. We want to move on now to the continuation patterns. In other words, the candlestick patterns that imply that price will continue to go in its current direction. A couple of things to notice here before we dive into the patterns is that there aren't as many continuation patterns as there are reversal patterns, and there aren't simple continuation patterns. We'll start with the complex continuation patterns formed by two candles. The first complex continuation pattern we are going to study is the bullish separating line, which is formed by one medium-sized bearish candle followed by one medium-sized bullish candle that opens with a gap as big as the body of the first bearish candle. The logical interpretation here is very simple. Since the second candle opens with a large gap up and it creates a medium-sized bullish candle, it becomes clear that there is a considerable amount of buying pressure implied in this pattern. The bullish separating line appears when price is going up in order to signal a continuation to the upside. Next we have the bearish separating line, which is the mirror image of the bullish separating line, so it's a bearish continuation pattern. The pattern is formed by a medium-sized bullish candle followed by a medium-sized bearish candle that opens with a gap as large as the body of the first candle. The fact that price opens in the second candle with a large gap down, added to the fact that the second candle has a bearish quality, implies that there is a lot of selling pressure in the market. The bearish separating line will appear when price is going down in order to signal a continuation to the downside. The next pattern is the bullish on-neck line, which is also composed by two candles. The first is a medium-sized bullish candle. The second is a small bearish candle that opens with a considerable gap up. The logical interpretation here is that the fact that the second candle opened with a gap up and was unable to close this gap implies that there is a lot of buying pressure in the market, and sellers are not strong enough to fill the gap, which implies that price will continue to go up. The bullish on-neck line appears when price is going up in order to signal a continuation to the upside. Next, we have the bearish on-neck line, which is the mirror